When implementing an EPC, your PHA installs energy or water conservation measures, called ECMs. These measures reduce utility consumption and create savings for your PHA. To maximize savings, the EPC program offers 3 incentives: the Add-On Subsidy incentive, the Frozen Rolling Base incentive, and the Resident Paid Utility incentive. These incentives are regulatory measures that also ensure EPC savings can be measured and verified by your PHA. This video focuses on the basics of the Add-On Subsidy or AOS incentive. For detailed information on any of the topics discussed in the video, please see the other videos in this training series, PIH Notice 2024-27, and the HUD Public Housing Energy Branch website. So, what is the Add-On Subsidy incentive? In contrast to the Frozen Rolling Base or Resident Paid Utility incentives, the AOS is a cost-based incentive. The AOS incentive increases a PHA's total operating subsidy grant eligibility by providing subsidies for loan costs associated with energy and water conservation measures and other costs directly related to the EPC. In the simplest terms, this means that HUD adds money on top of what your PHA would otherwise receive in operating subsidy, specifically to help your PHA pay for the costs of its energy improvements. To better understand, let's look at some of the rules, regulations, and principles that guide the AOS incentive. The AOS incentive can only be applied to approved EPC project costs. These costs will vary by project and must be reviewed and approved by HUD. EPC project costs for your specific project will be identified in your EPC approval letter. Another distinguishing feature of the AOS incentive is that it does not have to follow the 75% rule like the FRB and RPU incentives. Instead, the AOS incentive is subject to the lesser of costs or savings rule. Under this lesser of costs or savings rule, EPC project costs and EPC savings are compared and requires that HUD only subsidize the amount that is lower. Why is this so important? Because your PHAs do not get to keep any excess savings from utilities using the AOS incentive. So if an EMC you installed as part of an EPC project overperforms and your EPC savings exceed your EPC project costs, you cannot keep these excess savings. Your add-on subsidy will simply be capped at your project costs. An important note, excess savings from utilities using the AOS incentive can be used to cover underperforming ECMs in a process called cross-subsidization. However, there are additional risks a PHA should consider. For more information, please see the cross-subsidization video in this training series and the HUD Public Housing Energy Branch website. The AOS incentive offers 3 methods for measuring and verifying your savings: Option A, Option B, and Option C. Although there are specific criteria for each method, the primary difference between the options are what factors are used to calculate savings. Option A uses stipulated consumption savings to calculate savings, meaning your savings levels are established at the beginning of the EPC and are based on field testing, historical values, manufacturer data, or other technical sources acceptable to HUD. AOS Option B and Option C both use a reference baseline to calculate savings. The reference baseline is the average of 3 years of historical utility consumption data. Each year, you compare actual current consumption against that reference baseline to determine your cost savings. The difference between the options is where utility consumption is measured. For Option B, utility consumption is measured at the equipment, while Option C is measured at the site or project. Which option your PHA chooses will depend on specific factors related to your EPC. This decision will be made prior to implementing your EPC and will be locked in through the term of your EPC. Your stipulated consumption savings, or reference baseline, will be identified in your EPC approval letter. And note, utilities receiving the AOS incentive are also eligible for the operating fund benefit. Although the operating fund benefit is not an EPC incentive, it is a meaningful financial benefit that PHAs can factor into their EPC cash flow when structuring your project. EPC incentives, including the AOS incentive, are validated annually as part of the EPC incentive savings verification process, which is in line with your PHA's annual operating subsidy submission process. Previously, AOS followed a calendar year reporting period, January 1st through December 31st. PIH Notice 2024-27 updated the AOS reporting period to July 1st to June 30th, so it now aligns with the frozen rolling base and resident paid utility incentives. This reporting update applies to all EPCs approved after this notice's publication. If your PHA has previously approved AOSs, you may continue using the old calendar year reporting period. But if your PHA wishes to switch to the new July 1st to June 30th reporting cycle, you may contact HUD and request a revised EPC approval letter. After the reporting period, your PHA will submit your EPC incentive cost verification to HUD. Be aware that there is a deadline to submit your verification, which is announced every year in HUD's annual operating subsidy processing notice. HUD will then review the submission for any needed adjustments or revisions for the next funding period, which runs from January 1st to December 31st. Okay, let's do a quick review of what we covered in this video. The Add-On Subsidy incentive is one of 3 EPC incentives that aims to maximize EPC savings for the PHA. AOS directly increases your operating subsidy to help pay for EPC project costs. AOS savings are calculated using one of 3 methods: Option A, which uses a stipulated consumption savings, or Options B and C, which use a reference base. Option B's utility consumption is measured at the equipment, while Option C is measured at the site or project. PIH Notice 2024-27 updates the reporting period for the add-on subsidy to July 1st to June 30th. The funding period remains January 1st to December 31st. Thank you for your commitment to energy and water conservation. For more information on the add-on subsidy incentive and energy performance contracting, please see the other videos in this training series and the HUD Public Housing Energy Branch website. Questions or comments can be directed to PIH Energy Branch at hud.gov.